You know your trading rules. You've written them down. You follow them in practice. And then the market opens and you break them once again. Over 25 years, I've personally seen this pattern repeat over and over again across thousands of traders, smart people, experienced people, people who have read every trading book, watched every YouTube video, and tried every system. But yet, they still end up adding to their losers and cutting their winners short. You see, the problem is not discipline. The problem is not a lack of willpower, and it's not that you don't care enough. The problem is that you're asking your brain to make a high-stakes decision under pressure without an automatic circuit breaker in place. And by the end of this, you're going to understand why that's happening and how we're going to stop it. Most traders just think they need more discipline, more motivation, maybe a different morning routine. But here's the thing. Discipline issues are not the cause of you breaking your trading rules. They're the symptom. You see, when your brain is forced to operate under pressure, logic goes out the window and it defaults to emotional state. And that's normal. It's not a character flaw, it's neurological. And it's how humans have stayed alive for thousands of years. Fight or flight. But a rule only works if it prompts a decision before the pressure arrives. If you're making decisions in the heat of the moment in a fast-moving market, well, you've already lost. Now, when did you last break your trading rules? Was it before or after the trade went against you? Almost always, the answer is after. Remember this, a rule that requires willpower is not a rule, it's just a suggestion. When a trade that you're in suddenly moves against you, two different response systems automatically activate inside your brain at the same time. First is the rational system. That's the logical side, so you can follow your trading rules. But second is the emotional system. Fear, hope, regret, your ego, they all live there. Now, between these two systems, when you're under pressure, the emotional system is going to respond first every time because it's faster. It was designed to be. It's a human survival mechanism. It's what kept us alive for tens of thousands of years. So under pressure, the emotional system is always going to override the logical system. And this is exactly why even the most experienced traders still find themselves breaking their rules. Well, there's only one reliable solution to fix this. The solution is pre-commitment. Having a preset framework with a set of rules that tell you exactly what to do in any scenario before the pressure arrives. And that is what a rule-based methodology gives you. It's not a trading style, it's simply a framework with rules that tell you how to respond in every scenario, and you have preparation before the market opens, before there's pressure. That is what enables you to follow your rules and not have the emotional system override it. Ev Goodwin is actually one of our community members, and he's actually been trading for over 45 years. He's a systems engineer at IBM. He's retired now. And for 45 years, he's been trading, but when I met him, he told me he's had inconsistent results all that time, despite the fact he's tried to learn a lot. He's read every book, watched every video, tried every course, but still was inconsistent. And what we discovered in coaching with him is that he was inconsistent because of the fact that he didn't have a complete connected methodology. He had learned so many bits and pieces over the decades, but he had all these bits of knowledge floating around without anything to connect it together. And that's why he was spinning his wheels. He was inconsistent. So once he learned to apply a complete rule-based framework where all the pieces fit together like a puzzle, then his results improved dramatically and his win rate went up. So remember this, you do not rise to the level of your discipline when you're under pressure. Instead, what happens is you fall to the level of your preset rules. That's why you need to have the preset rules in place. What exactly is a trading rule? Under our methodology, a real rule has three different properties. First, it must be specific, not arbitrary. Second, it must be binary. And third, it must not require any judgment in the heat of the moment. Let me give you a couple examples of good rules versus bad rule. I meet traders all the time. I hear them say things like, I want to hold my winners longer, or I want to cut my losses faster. But the thing is, this is not a rule, right? This is a hope, a wish, a desire, but it's not a rule, right? Because it's too vague and it leaves too much room open for interpretation. So if, for example, you want to hold winners longer, that's a bad rule. But a good example of that might be, All right, I'm going to hold on to my winning position as long as it's in an uptrend and holds above the 8-day EMA. I will sell the first day it closes below the 8-day EMA. You see the difference? There's no room for interpretation there. Right? It's a very hard and fast rule for telling you exactly what to do. Another example would be if, let's say, you want to get better at cutting your losses quickly. All right? Well, just saying cut my losses quickly is not going to work, right? Because it's too vague, it's too open for interpretation. Instead, what you want to say is something like, well, I'm going to enter a stop loss every time immediately after I enter a trade, and that stop loss is going to be predetermined, and if it hits my stop, I know exactly how much I've lost and I'm out. All right? That's much more of a real rule than I just want to cut my losses quickly. All right? The thing is, your brain is very good at playing tricks on you, especially in the heat of the moment. Let me give you an example of that. I'm sure you've had a trade before where maybe it's past your stop, or it broke down, it broke support, and you're thinking you should get out. You know you should get out, but then you have this little nagging voice in your head that says, well, wait a minute, just be a little patient here, right? This one's different. This is a good company fundamentally. It's going to come back. Institutions love this company, or whatever excuse you make, all right? You're convinced, your brain convinces you that you're just being patient. But in actuality, what's really happening there is emotions are running the show, right? You've fallen into hope mode, right? And your brain is trying to trick you that you're being rational, that you're being patient, when in actuality, you're not. You're acting out of emotion. So this is the key here, and that's why a real methodology does not leave any room for interpretation. Our methodology is very, very binary. If the price does X, we do Y. If the price does Y, we do Z. So it removes all the guesswork, and when you remove the guesswork, it removes a lot of the emotion and the need for willpower, right? So your job as a trader should not be just to say, well, I want to be more disciplined. Your goal as a trader should be to say, okay, I want to develop a methodology that enables me to remove the emotions from my trading because everything is already preset and predetermined. Not just, I want to be more disciplined, right? Because remember, you'll be more disciplined automatically as a symptom when you've got the methodology down solid. Coming up, we're going to walk through a real trade where the rules automatically decided what to do. We didn't have to choose what to do next because the methodology chose. And if this is connecting with you as something that you've been dealing with for a while, I put together a free 90-minute workshop on exactly this. The link is in the description. Now let's go ahead and check out that trade setup. Okay, so this is a swing trade setup. You can see it was a breakout play. The price action broke out from this area that we've highlighted, and we missed the breakout. And when you miss a breakout, it's very tempting to chase. In fact, if you were watching this, every instinct said to get in. I mean, the price action just 6 days in a row or just straight up, and everybody else was getting in. And we didn't get in. We did not get in because we have a rule that says if the price is too extended from the breakout point, we don't chase. No discussion. That's the rule. And in this particular case, the price action was actually more than 20% above the 8-day EMA, this green line. And so that rule told us no chasing, no chasing. We got to wait. So instead of chasing the price action here like everybody else, we waited. So let's see what happened. As you can see what happened next, traders who chased this move, they ended up getting caught. They got trapped near the highs. And instead, we were in cash because our rules told us don't chase. And instead, we were sitting on the sidelines waiting for one specific thing to happen. And that's actually what happened right here. We got a pullback to the 20-day EMA. One of our rules says if we miss a breakout and it's a strong play and the volume confirms, we wait for a pullback to the 20-day EMA. So we got our perfect entry here with a bullish reversal candle right off the 20-day EMA. And we actually made this as a live call in our member chat room. So subscribers saw the entry in real time. So let's take a look at what happened next. As you can see, the 20-day EMA acted perfectly as support. And right after our entry at 520, the price action continued higher and broke out to new swing highs. And we're currently showing a gain of nearly 30% because we patiently waited for a proper entry. And the key point here is that we didn't predict this bounce. Our rule simply said this is the entry. So there was two different decisions on this trade. The first decision was to stay out. The second decision was to wait for the pullback. Both of those decisions were made by the rules before I ever even opened the chart. So how do you build a rule-based methodology that makes your discipline automatic? Well, there are 3 requirements that any methodology must have in order for it to actually work under pressure. First is that the rules of your methodology must be specific and binary, no room for interpretation. Second is that the rules must be written down before the market opens. Right? No trying to figure out your trading rules when you're in the middle of a trade and emotions are running high. And third is that your methodology needs to account for all the elements of trading. That includes position sizing, entries, exits, stops, and your hold strategy. A good methodology accounts for every potential scenario that the market can throw at you in advance, so you don't have to think, the rules are there. It removes the guesswork. And the result of this, when you build a methodology that actually has all your rules accounted for in advance, the result is that you're not going to be a more disciplined trader. The result is that your methodology is the discipline. And this is why TradeQuest exists. TradeQuest is not a trading course. It's actually a complete rule-based methodology that accounts for every scenario in advance, a pre-commitment architecture for every scenario that the market can throw at you. Each and every module handles every scenario that can occur in the market. And what I've found from working with traders over the years is that the traders who struggle the longest, it's actually not that they lack discipline. What the problem is that they keep learning more and more knowledge without actually having a methodology or a framework to put it all together. So stop trying to be more disciplined and instead become a trader who doesn't need discipline because your methodology does it for you automatically. If you found this video helpful, hit the subscribe button. We post new trading videos every week, just like this one that you can watch next. And if you're ready to stop relying on willpower and start trading with a methodology that makes your discipline automatic, the link is in the description. Otherwise, see you back in our next video.